And one estimate says that India is looking at more than 2 lakh crore of IPOs this year, backed by big names. They're all planning to come up, and hence and that will provide necessary capital for expansion and also taking those risky bets. And hence I turn to Sonia, who is representing one of the large investment banking business in India. That how do you see the role of investment banks in achieving our uh, growth and objectives? Yeah, over to you.
Let me start to give you the perspective that clearly calendar year 24 has been a year where India has seen the maximum number of deals, at least in 25 plus years of my career in investment banking. I have not seen that kind of deal velocity that has happened. As you can see here, 91 IPOs. Over and above that, we had an equal number of QIPs that happened. Close to 1,61,000 crore raised through IPOs, another 1.5 lakh through QIPs. So extremely deep capital market has got developed. And undoubtedly, what it has proven is that it's not only this is despite FIIs actually on a net basis between primary and secondary markets being neutral. So whatever they exited in the secondary market, they brought in the primary market. So the real inflow has really come from the power of the mutual funds. And that mutual fund through the SIP route is ultimately the money of all the retail Indian investors. So that is a huge tailwind that is building up. And that is, one of the very unique things about India, which really helps us getting insulated against global flows. If this kind of outflow had been there in 1995 or 2000, the markets would have, would have completely crashed. But Indian markets continued to be strong. The average return that was given in the IPOs last year was close to 32%. If you see the last 5 years and you look at, year to date, any of the companies that have IPO'd, on an average, they would have given anywhere between 25 to 35% return. So despite so much of outflow being there, the Indian markets have held up. And I think this is because of a lot of work that has happened behind the scenes by the regulators, by the governments, the whole, the digital infra stack that has got developed. A lot of small things have made it extremely convenient for investments, for getting information, which really is the true power for the rich demographic profile that India has. I think uh, across the globe, the only country that has this kind of youth with intellectual power, youth with hunger, is India, and that is why we are actually seeing so many GCCs come here. So clearly, the youth is our biggest strength, and I think making sure that their aspirations are fulfilled is the responsibility of whether it's banks, investment banks, insurance company, asset managements, and that clearly is the role of investment banking. I'm trying to. So this is just a summary of the QIPs that happened. But if I were to actually see what is really the role of investment banking is nothing but bringing together the pools of capital that are needed for the growth from the pools of capital that need returns from their savings, right? So it is really a role that is a bridge from the savers to the capital formers, right? And I think while the instruments that are available in India are very, very thin, very, very small compared to what they are globally. And I think that is one very big requirement of deepening and widening of our Indian capital markets that is required, right? Because if you see the US, there is so many different instruments, even on equities. There will be derivatives, there will be strip products on debt. our debt capital markets have really been not been able to catch up as much as equity, and I will not go into that whole thing, but that is one great requirement that we need to sort of be focused on as a nation to make sure that that develops. And I think a lot needs to be done starting from taxation. We have the budget tomorrow. Let's see how that goes. But clearly, last few the changes in taxations have pulled us 2 steps back. And it could well be because of the requirements of banks for their own deposits. But that's a discussion for another day. Simple point being that we need, if you see globally, the debt capital markets are far, far bigger than the equity capital markets. And I think that's one area that India clearly needs to work on to make sure that we are up there trading debt instruments also, because till now that has been restricted to more sovereign. Corporate bond market has really not picked up. And we are hoping that, in your lifetime, there'll be a lot more different products where corporates will be able to trade not only their performing debt, but also their non-performing. And though that whole market becomes active, so while in our career we have seen a great ramp up in the equity markets, I'm sure all of you will see an equally strong and stellar growth in the debt markets, because that is something that will be required for both infrastructure as well as ESG, green bonds, building up cities, the municipality bonds. So a lot more needs to be done. And clearly the firepower of all this will have to come from the savings. And we have seen, if you see in the past, if you just see the financialization of savings that has happened, clearly we are looking at, if you see the number of demat accounts, in just the last 5 years have gone up 5x. Of course, the whole COVID and COVID period digitization has been a major scaler of this. You are seeing many, unicorns being built, which are only dealing with digital ways of, interacting in the market. If you see the number of NPS subscribers, again, a huge ramp up. If you see the monthly SIPs again, so every metric that you see has gone up 3 to 5x, right, in 5 years. And that's a very steep growth. And, the credit to all this has to clearly come from the whole ease of doing business, of interacting with information, of trading, of the ease of the money coming back into your account. I don't want to sound too old by saying how difficult it was when DMAT was not there. There were paper scripts. I'm sure none of you even know that, so I don't want to delve into that. But I can just summarize saying it was horror dealing in the market with a lot of scams, and things have become so much easier. Like I said, the mutual funds are really the backbone, along with the all the insurance companies, which are really channelizing financial savings into the Indian market. And still, we are highly underpenetrated. If you see mutual fund AUM to GDP, which is close to 18%, is more than 100% in the US, right? It's all, it's 83% in Canada, 60%. So we have a long way to go. Despite having seen the stellar growth that has come in the mutual funds. And this is something that gives us a lot of confidence that this is something that will continue to be the tailwind of growth in the Indian capital market. So clearly what is required for us to be able to achieve the mission 2047, as Professor Banerjee was saying, many different estimates of where the GDP will be. But clearly, if you were to look at, 4, 5 things which are very important. One is, of course, education. And I think the SEBI has been at the forefront of this, making sure that more and more people get literate about financialization of savings, of taxation. The regulations from regulators in terms of ease of raising money from the market, the speed at which it can be and do. And, we at JM are working very closely with SEBI in demystifying DRHP documents, in making the whole process faster. SEBI chairperson is very also focused on having actually accountability on how much time is taken for documents to be approved, so that we don't miss the window to tap the markets. And of course, the whole digitization has really helped. We used to be T+7 settlement after the IPO. Now it's become T+3, and she's already talking of T+1. On the secondary, it's already become T+2. Unreal. It is the best in the whole world.